Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 13th of October. Starting off with the Cent Resources, where we're following up from that break of the 50-day moving average and that line of resistance from April early last month. A bit of a zigzag, testing the 50-day moving average since and then bouncing off that. The good news today is that we're just peeking through the 200-day line and looks as though we're going to make further progress. The target here, the top of that broadening triangle from the beginning of March, currently pointing around the 7.5 pence area. Hopefully you could see that by the end of next month. Stop loss at the moment back below the, I suppose ideally back below the September peak at 3.3 3/4 pence, but maybe one might have to allow down to the 20-day line at 3.25. Just on the basis that this has been a bit of a wobbly progression higher. So let's see how that pans out. Rather more low-key Bulletin Board Heroes in terms of the stocks today, but allows us to look at the likes of Bluebird Merchant Ventures, which recently has had good updates. Second gap to the upside in the last few weeks for the shares, so that's normally positive news, and an end-of-day close above September resistance of 5.6 pence should get the stock on the way to the top of the February trend channel, around 9.5 pence, hopefully by the end of next month if we start accelerating as we should. Botswana is next, Botswana Diamonds. Here we've got clear break of the 200-day moving average and that line of resistance from the end of May at 0.7 pence, also backing the idea that this could be a move with legs to the upside, is the way that we had a 2-day bear trap from just below 0.6 pence earlier this month, or last week in fact. So that is normally that sort of stopping out or cleaning out of the weak bulls normally precedes a move to the upside, a decent one, and so we are looking towards the top of the February trend channel, 1.25 pence over the next 1 to 2 months for Botswana. Again, on the obscure stocks theme, here we've got DX Group, which has bounced off the floor of its rising trend channel from back in November. We've got also the shares bouncing off the 50-day moving average at 16.4 pence, and at least while we're above post-September support at 15 pence, looking towards or looking for a top of channel target as high as 28 pence, hopefully by the end of next month. On to another stock which has been moving relatively well over the recent past, European Metals. Here we've broken through the sticky 25 pence resistance zone, and as often the case, a break of 25 pence then points to 35 pence in this case. That would be at the top of the August 2019 price channel at that level. Stop loss at this stage probably can't really be much tighter than the 50-day line at 20.5 pence, but might get away with the 20-day moving average, the purple line there at 22.5, if we get a decent breakout through 25 for the rest of the week. Eris is next, and here we can see that shares again, a bit of a bear trap there, turn of the month below 6 pence, so that does that has actually, well, did forecast the move to the upside that we've had. Support also coming in above the 200-day moving average since June, actually, the rising 200-day line at 5 pence, that's a plus that it's rising. And decent end-of-day close today above 8 pence should be enough to allow us to project 13 pence as soon as the end of next month, at the top of that rising 1-year trend channel that we have. Stop loss at the moment back below the 50-day moving average at 6.64 pence. Good to see G3 Exploration finally doing its stuff on the bull side. A very, very long consolidation for the share since the beginning of the year, between 10 and 15 pence with a few false dawns in there as well, which is rather painful. Hopefully this will not be a false dawn, but need to see an end-of-day close above last month's resistance at 13 pence to just solidify the bull argument. A weekly close above that level should be enough to take the shares up to 30 pence, which is that January resistance line projection. But all of that really relies on 13 pence holding, especially given the way that we've had any spike towards 15 pence, or all the spikes towards 15 pence so far sold this year. So slightly fiddly maybe on that basis. Itaconix is the next stock in the spotlight. Here we can see that we've had a nice breakout. Actually had a gap higher at the beginning of the month through the 1.8, 1.9 pence zone. But held that gap with a flag as well above old resistance. So floor of the flag around 1.95 pence, and then broke the initial October resistance at 2.1 pence. At least while we're above 2.1, looking for 3.5 by the end of next month. Hopefully, well, perhaps even by the end of this month. Top of the channel from December at 3.5 pence. And at this stage, only really sustained price action back below 1.9, really delaying the upside scenario. A bit thin on the ground as far as bullish contenders are concerned today. So revisiting one of the more talked about situations at the moment, that's Kibo Energy. Key here is that we remain above the 20-day moving average at 0.24 on an end-of-day close basis. If you're cautious on the stock, which I think most people would be, you want to see a weekly close above the 200-day moving average at 0.31. If we can get that this week or next week, then that would open up a 0.65 pence target at the top of the March triangle, hopefully by, well before the end of this year. Welcome return for Encondezi Energy, and here we've got another situation where there's been a little bear trap, 3 pence, the support for the shares in March, and then a few days just below it just to shake out or cause a bit of nerves for weak bulls. But we've pushed back above the 3 pence level quite well now. Probably want to see 3.5 pence plus to be sure of a sustained recovery on this occasion. But if we can get that over the next few sessions, then a return to 5 pence could be on the cards for Encondezi. Best case scenario target now, if you believe that the bear trap was a harbinger of a decent move, would be the February resistance line projection, currently pointing at 7 pence. Good to see the MACD indicator giving us a buy signal as well, so maybe that will work and help the situation out, as well as the bullish divergence in the RSI window. We had the lower low there for October, but a higher RSI support, so perhaps that is also a leading indicator on the upside. Interviewed this company just a couple of days ago, Red Rock Resources. Shares have since bounced off the 0.7 pence zone. In fact, there was a little bear trap below 0.7, so that might help the bull cause after the bear trap. And end of day close above the 50-day moving average at 0.81 would certainly help the bull argument and cement the idea that we could head up to the top of the trend channel from January, currently pointing at 1.25 pence. And that target value while we hold above recent 0.66 pence support. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.